That's the key, isn't it, Bryn? As Stacey Rasgon, as Josh just said, quote, the story, this is what he says today. The story still feels like it has legs. We markedly increase estimates again and take our price target to $1,000. He was at $700, which we asked him about yesterday. He said, don't pay too much attention to my target there, but he bumps it to $1,000.
Yeah, I mean, what's so incredible is if you think about it, if you take a Google, Apple, Meta, Microsoft, and Amazon, what, $12 trillion market cap? When all of these companies get together behind the same theme, which is AI, Nvidia is the recipient of all of that, the majority of that CapEx. And so this call, if you haven't listened to the call as an investor, I implore you to go listen to the call. It was like a masterclass. And this is so exciting because I've just never seen a company that in 2021, they had revenues of like just shy of 17 billion. For 2024, they're going to do 60 billion. I just don't know of a company this size that have had just this catapult. And so investors need to remember the revenues and earnings are growing really in lockstep with the price. And so I think they're hitting on all cylinders. I will say, Scott, though, if you think about it a year from now, I don't think you're going to continue to see 200% growth year over year because you're going to see that stabilize. But you're still even looking out even further out. This company is probably going to be growing at 15 to 16% a year. So they just continue to be in pole position while everyone else is just trying to ride their wave.
You were calm, cool, collected yesterday going into the number two. I asked you straight up if you were nervous. You said no. Because you believe in the company, you believe in the stock. They obviously delivered. Jim Lebenthal, I'll go to you next because you also own it. Reasonably new position for you. You were looking for this thing to trade lower so that maybe you could buy more. You're not going to get that chance, or maybe you had it and didn't buy enough.
Yeah, no, I don't think it's going lower from here, but I also think the major point that I would make is that you do have to own this. Now, I know it's a controversial statement. There are some on the desk and others who are not on the desk who would say there's no stock you ever have to own. But look, clearly, all the oxygen in the room, and by that I mean the cash flows in the market, are going to Nvidia. And fundamentally, there are strong reasons, which Josh and Bryn just pointed out, for that to continue. I said last week, Scott, and you'll remember, I said, listen, you got to own this at 1%. That's a small enough position that on any dips you can add to it. I'm saying that again today. If you don't own it, I do recommend that you add a 1% position to it.
When you look at this compared to your other holdings, so this company, 21% operating margins last year. This year, 62%. Yeah. This is unheard of.
I mean,
here's my question. So you look at that and you say, maybe 1% is not correct.
Maybe it should be more.
Well, we all own like some we have these companies that are earning maybe like 2% profit margin, trying to scratch nuggets of copper out of the ground.
I'll dance with you. I mean, look, the reason I'm saying 1% is, let's face it, it's up 15% today, and we can go through the superlatives of its price return year to date, the last 2 years, whatever you want. I mean, the 1%.
It was 660. I'll go back. It was 666 yesterday.
Right.
Ahead of the number, I was like, oh man, that's an ominous number to go into a print on, and now it was 777.
And
so it was up 100.
I'll just close on this from a fundamental point of view, and I know it sometimes drives you crazy when I do this or when Stephanie does this, but you look at the valuation, you're going to say, as Stacey Rasgon just said, it's not expensive. I mean, the earnings estimates are going to go up after this, and it's probably below 30 times forward earnings. You got a growth rate of above 50%. The PEG ratio, price to earnings to growth ratio, folks, is below 1. For a company that is just absolutely knocking the cover off the ball, and the cover and the ball are out of the park.
Yeah. So, Steph, you don't own it. I think people know that by now. You own Broadcom, you own Lam, you own IBM. I put a sad face emoji by your name today in our document today.
It's a humbling business.
Playing a little bit.
It's all right.
On that.
Stephanie, why do you hate Nvidia?
I knew you were going to say that. Or why am I short Nvidia?
Because
why are you shorting Nvidia,
I think
Stephanie?
this is not me saying this. I'll channel Rasgon and say, no one has to own anything. But don't tell me you don't own it because it's too expensive. Because as he makes the case, it's still actually the cheapest of all of the AI stocks.
Well, it's not.
That's Stacey Rasgon.
No, it's not. At 32 times, actually, Broadcom's at 27 times. And I think that Broadcom is a great way to play AI. And so that's what I've chosen to do, as well as Lam, as you mentioned, as well as IBM. And we're going to talk about another name down the road in the next block. But look, the stock is going to continue to work, especially as the hyperscalers continue to show that demand. So it's really durable. And the inference numbers were huge, at 40% 2%. That's double what people were expecting. So all that's great. I just feel like I missed it, and I also feel like I have better value for what I see as superior growth, not to Nvidia, but to many other technology companies, especially with Broadcom. I mean, Broadcom is the #2 AI supplier, $8 billion a year. They're the #1 custom ASIC player, $12 billion per year. And they have cloud, they've got data center, they've got wireless, they have VMware. And I know you want to have this discussion more about Nvidia, but I'm just saying that you can own both. No. I don't own both, but I own a good player, and I've had a nice return in this thing.
I appreciate very much your reasoning, admitting, hey, okay, I missed it. You just said I missed it. Yep. But I have these other ways that I can still play the trend in really key players that are cheap on a valuation standpoint, where you can get comfortable around it. Not everybody picks every single stock perfectly.